Tesla is very close in market cap to Bitcoin. Bitcoin and Tesla are like two siblings. The investment world and the traditional finance world does not believe in Bitcoin. They do not believe in Tesla. It's a fascinating combination, but those two things to me work hand in hand together. I believe they are the two best assets to own next year, and they are ones that have the same thing. There's no story for Bitcoin to convince people in the traditional finance world that it'll ever work. And in the same way, people can't believe Tesla. So
when technology, belief, and disruption collide, Bitcoin stops being a trade and becomes a thesis about the future. In evaluating Jordi Visser's perspective, you quickly realize that his framework for understanding Bitcoin diverges sharply from the typical macro narratives dominating financial media. Visser dismisses the idea that Bitcoin's long-term strength is merely a function of dollar weakness or runaway debt cycles, instead grounding his outlook in a broader technological and societal shift. His recollection of a 2019 exchange with Michael Milken is particularly telling. The dollar, Milken argued, is not just a currency but a belief system powerful enough to attract billions if borders were opened. That insight reframed Visser's thinking, leading him to view Bitcoin less as an anti-dollar hedge and more as a beneficiary of exponential innovation, especially the rapid scaling of AI. And in your assessment, Visser is right to emphasize concentration dynamics. Whether it's a handful of tech giants driving equity markets or a small cohort owning a third of all Bitcoin, the system is tilting toward extremes. Yet he argues this concentration paradoxically fuels Bitcoin's upside as AI accelerates structural disruption. His comparison of Bitcoin and Tesla as siblings is also notable, especially given Tesla's sizable Bitcoin treasury and the market's shared skepticism toward both assets. When viewed together, you can see why Visser believes they remain two of the most compelling asymmetric bets in the innovation-driven economy emerging ahead. If Visser's outlook reshapes how you see Bitcoin's next decade, drop a comment, share this with your network, and subscribe for more deep market breakdowns.
I mean, we hear all the time about how concentrated the market is. If the market wasn't concentrated, Bitcoin wouldn't be at the level it is. This is very circular for people to hear from me, but the reason that I ended up believing in Bitcoin is not for the reasons that everyone talks about. Every time I hear someone on one of these shows say, well, the dollar is going to weaken and that's why Bitcoin is going to go up. I made a reference, which I've never talked about on one of these podcasts. In fact, you'll be the first one to go, but because I wrote about it in my Substack, Michael Milken is one of the smartest people that I've had the privilege to sit in a room with and have a conversation with and brainstorm. And he and I were in his library in California, and we were having a long macro conversation about the future and debating. And I kept harping on the fact that I thought the dollar was going to weaken. And this was back in 2019-ish. And I always remember that he basically looked at me and he finally kind of raised his voice. He said, "You're not getting it. The dollar is not a currency. The dollar is a belief. And if you opened up the borders to everyone on the planet, and they had one day to come inside the border and be a citizen that day, we'd have 7 billion people in America tomorrow." And there was truth in what he said, and it made me believe at that point that all of the stories that I had heard about Bitcoin, the debasing and all this, it's all true, meaning it is causing people to lose money gradually over time through inflation relative to the power of buying stuff. We can see it with the socialist revolt that's happening. This is not something new. This has been going on. But where Bitcoin has benefited from this is the reason the white paper came in the first place. Governments have been doing this for a long time. It is meant to keep the debt going and to keep avoiding pain. And the longer you go for avoiding pain, the more that you create the issue. So I don't believe Bitcoin's strength is about the dollar weakening. I don't believe it's about the debt at the end of the day. I believe it's about exponential innovation. And exponential innovation is upon us right now. So AI and the whole growth and everything that's happening with these circular deals, they're all part of the concentration that's happening. There's 7 companies winning. There's 493 companies losing. There's 10% of people in the country that are wealthy. And then there's 90% that are struggling in some form to make ends meet. 70% of the country lives paycheck to paycheck. So this is not an economy or anything that is there. So if only the wealthy people are exchanging things everyone should remember, I forget how many hundreds of millions of Bitcoin holders there are at this point, but I think 10,000 own about 33%. So even Bitcoin is concentrated in terms of its wealth. So to have distribution, you need to have something that isn't happening. But the good thing is the circular deals are a representation of why Bitcoin will continue to accelerate and go higher, because I don't believe any of those companies at the end of the day are worth the money that they're going. This is a spending frenzy, which gives every individual AI, but those companies are not going to get the revenues that they should get from it, in my opinion. I do not believe they're in the end going to go. And I think when I was on your show the last time, the hot take moment that I had just talked about, which you wanted to talk about, was my belief that basically there'll be no public companies beginning in 2030, that all of them will basically be destroyed in some way, shape, or fashion by entrepreneurs and private companies. And I still believe that's the case. It's because AI is gobbling up everything and capitalism is consuming itself. I don't like the democracy we live in. It's the country we live in. I mean, people got to have their vote. They got to have their say. And in the end, you got over 70% of the votes. It's their company. People don't have to own the stock. And trust me, the people that don't agree with the $1 trillion package, they don't own the stock. So there's a lot of people. I can tell you, I've been shocked. In fact, I say this all the time. I'll say it again. Tesla is very close in market cap to Bitcoin. Bitcoin and Tesla are like two siblings. The investment world and the traditional finance world does not believe in Bitcoin. They do not believe in Tesla. It's a fascinating combination, but those two things to me work hand in hand together. I believe they are the two best assets to own next year, and they are ones that have the same thing. There's no story for Bitcoin to convince people in the traditional finance world that it'll ever work. And in the same way, people can't believe Tesla. So
Bitcoin isn't just evolving, it's being reshaped by forces far larger than the market realizes. In Jordi Visser's perspective, it becomes clear that his view of Bitcoin's evolution stretches far beyond short-term trading narratives. He argues that while retail participation has undeniably shaped market momentum, the true drivers of the next decade and a half will be structural and global. His reliance on the A16Z 2025 State of Crypto framework reinforces the idea that institutional adoption, demographic shifts, and geopolitical realities are converging to reshape Bitcoin's distribution. What stands out in Visser's argument is the contrast he draws between the developed world's trader-centric mentality and the developing world's survival-driven use of Bitcoin. From his experience in countries like Argentina and Brazil, he highlights how monetary instability fuels real demand, creating a steady underlying bid that absorbs selling from early whales. His interpretation of the recent Zelle development strengthens his case. If baby boomers, who hold most global wealth, gain seamless access to digital wallets through familiar banking rails, the psychological barrier to crypto ownership dissolves. Pair this with the rise of tokenization and increasing velocity of money, and Visser sees a financial system primed for expansion. Interestingly, he also notes that Bitcoin's current post-halving behavior diverges from historical cycles, suggesting that structural adoption may now be overpowering old speculative patterns. Let's get back to the interview.
Retail's had a huge impact on the stock market this year. It's obviously had a huge impact on Bitcoin over the years. But the more that I've spent time, and I listened to an A16Z podcast about their state of crypto for 2025, and it was really, really good, and people should listen to it. But one of the things they kind of hammered across to me is this: I'm breaking kind of the what will be fueling this distribution over the course of the next 15 years down to three components. One is obviously the institutional adoption, which is we all see increasing. We see it being now brought up in the banks. Everything's just going to continue to grow. And that's going to continue to happen with just everything within inside of space in terms of the institutions getting involved. You'll start to get more pension funds involved. You'll start to get that institutional adoption going. But when you break it down, the developed world has a trading mentality with Bitcoin. So the sentiment goes up and it goes down. If you're not making money in it, you're looking for something else to make money in. Trading and gambling is a part of this culture. It's a part of the group that matters for not only Bitcoin, but for a lot of the AI stocks. When you get into the developing world, That's a different story. They own Bitcoin. That ownership in a lot of countries is more dependent on the part that Michael Saylor talks about, which is hiding your money away from the governments, from true debasement, not what we go through in the United States. I really recommend that people go spend some time living in Argentina or Brazil, as I did for some of my years, and get to see what true debasement is. What we're going through in the U.S. is not true debasement. The GDP per capita of the U.S. is higher than every other place in the world that owns this much Bitcoin. So I think what we just have to get used to is that the developing worlds treat both stable coins for remittances and for transactions in a way to have stable value. And then when you get into the potential of actually growing your money, that's where Bitcoin fits in. That ownership and that redistribution is not only happening with inside Bitcoin, it's happening with inside the globe. And this is the argument that got me attracted to Bitcoin in the first place, not because wealthy people in the US would buy it, but because of the transfer of wealth from the demographics in terms of the ownership in the US going to a younger cohort, but then also the entrepreneurs of the world that are going to benefit from the democratization of education and the democratization that comes through artificial intelligence, but also through banking. And that growth is going to happen every year. And so you'll get the fuel from the developed world in the US and Europe and places that have money with the kids that are trading it. Once we get momentum going again in Bitcoin, they'll be involved again. But for the time being, there's a growing bid underneath, which has offset all of the OG selling. And that's why, to me, this is a very positive distribution that's going on. To sell 100 billion from a few people, someone has to buy 100 billion. And this is going to a lot of groups of people. I really think the Zell news, when that came out a couple weeks ago, was a big deal. Not because obviously it directly goes to Bitcoin, but I don't think people realize how challenging it was for people to even get around the concept of opening or having a digital wallet. So for, the baby boomers control 90, close to 90% of the net worth on the planet. At least when you get above the age of 65. And when you go through the demographics of ownership of crypto, you're completely on the other side. So if baby boomers would never get a digital wallet, well, they would use Zelle, they would go through a bank, and if they automatically have a digital wallet, it opens up the potential. And I used to joke with people on DraftKings and FanDuel that the second someone opens an account on there, their life changes dramatically, and all of a sudden they start gambling. It's almost impossible for someone to watch a game then and not be involved in it. And I think once a digital wallet comes in and it's almost instantaneous that you can take excess cash and make a decision on where it goes. You mentioned the commerce side. I'm heavily focused on the tokenization side. I think tokenization is just a natural next step of how you get the massive amounts of volumes going through the economy. And as Caitlin Long said recently, the velocity of money is just going to pick up with all of these advancements.
Looking at Bitcoin through this lens, it becomes evident that its role in the financial ecosystem is shifting from a speculative novelty to a structural component of a rapidly transforming economy. Its resilience is less about fiat weakness and more about the interplay of technological acceleration, demographic shifts, and global wealth concentration. You can see how demand from regions experiencing real monetary instability underpins a steady market floor, while innovations like AI, tokenization, and integrated digital wallets expand access and adoption, creating network effects that traditional macro analysis often misses. Even Tesla's substantial Bitcoin holdings underscore the emerging correlation between disruptive innovation and digital assets, highlighting how forward-looking enterprises are integrating Bitcoin into strategic capital allocation. Taken together, these factors suggest that Bitcoin's trajectory is increasingly driven by systemic and structural forces, positioning it as a high-conviction asset in an economy defined by exponential change. Do you think Bitcoin's adoption will be driven more by technological innovation or by macroeconomic factors in the coming decade? If this perspective reshapes how you see Bitcoin's role in the future economy, share your thoughts in the comments, spread the insights with your network, and subscribe for more in-depth market analysis.